Hello everybody and welcome to another edition of Bleeding Crypto's market update. Today is Wednesday, April 5th, and it's been a few days since we've done the last update video. So I told you guys I want to do it every couple of 2-3 days and keep you guys updated of what's going on, what moves are going on with Bitcoin, what I'm looking at as far as technicals, as far as derivatives liquidations, spot liquidations, well not spot liquidations but spot liquidity pools, better said. And so this is what the video is going to be about. But first, I wanted to tell you that this video is brought to you by MEX Global. So I do have a link in the description below. So if you are thinking of signing up to MEX, please use my referral link. I appreciate it. Along there, I have other referral links like HyBlock. HyBlock is a site that I use very often to help me come up with a game plan as far as trading. And I'll go over that in detail in just a minute. Also, you can put the speed of this video at 1.5 or 2x to make it go faster. I know I talk really fast as it is, so 1x might be the max that you could listen to it without losing some of the definitions or the pronunciations of the words, better said. All right, so let's go ahead and dive into our analysis. Looking at Bitcoin here, let me do this. I'm going to continue on this chart here because this one, just let me clean it up a little bit. Let me get rid of this. I don't need this. Okay. We are 3 weeks inside of this range. So the range here, which is distinguished by this top line, this bottom range line, and this dotted yellow line. The dotted yellow line is the medium of this channel. So you can see the channel here. We've been in here for 3 weeks now. Now, these yellow bars here, these are updated. I went ahead and updated it before the video so that we don't waste any time updating them live. I'll show you a quick snapshot of it. So I use basically that as my guide to snap these lines to give you guys a visual of where the market makers are poised to make the most amount of money. Now, during the day, if you guys want to join my free Telegram group, I update these periodically. They do change as price develops. All you have to do is send me a DM on Twitter and I'll get you access to my free Telegram channel. So I want to go ahead and just point out the areas of right now that I'm looking at to get filled. Yesterday, let's start with this. Let's start with this move real quick here because this is a move that I had shared with my Telegram. I updated them on a video this morning, and I wanted to show you this contract here. This was a liquidation bubble. They got knocked out for $26.3 million. The contract, the liquidation point was $28,744. We literally wicked up to $28,750, $6 above the liquidation strike rate. Once we liquidated that contract, we sold off. Now, from this sell-off, I have updated these 3 liquidation areas to keep in mind. We are now inside of this one here. If the price goes up to this area here, we will liquidate a large pool of contracts. If we go up to this one, the same last major wall of liquidity, not derivatives. These 3 here are these are the 3 biggest derivatives liquidation areas to note. This here is our spot sell wall. There is a massive sell wall right at $30,000. So looking at this from a higher time frame view, would be nice if we can come down and hit this here before moving up. And generally, when we are this close, when we got this close to something like this, to a pool like this, they generally do bring it down just like they did on this one here. This is, like I said, this is updated, but on this move here, there was actually a contract short, just a little bit north within, I think it was $10 or $15 north of this wick, that this wick came and took out a couple of levels. So it's interesting to see how these wicks, they will come down really quick, knock down those liquidation levels, and come right back up. That's what this wick was about. We had 2 major areas of liquidity, of liquidations, which were tapped out. Now that we're here, and we have these 2 up here, these liquidation levels, not talking about the spot, these 2 liquidation levels, it seems reasonable that they may come down here and tap that. Or they may wait. The higher this goes, the more of these contracts are getting paid off. This is a pool of different size contracts. And the higher, obviously, the higher we move, these starts to cool down. So looking at it from a MM perspective, coming down here before moving up would be something that I would do, but obviously I'm not a market maker, and there's more than just saying, let's just bring it down here. There's a lot of money involved. There's a lot of selling that has to happen for the price to come down and do that. So I'm not that smart to know what the exact route of the market's going to take, but what I can do is look at the areas of interest and then try to map out an area that I can trade. At the moment, we've been probably let me see here, from I think it was the 18th maybe, since we moved up here. Let me look real quick here. Let's see here. We moved up here on the 17th. Okay, so we moved up in the side of this range on the 17th. We've been consolidating here for, like I said, 3 weeks. We are hitting an area we've been talking about this before. Oof, this is very messy. Let me use a different chart. Here we go. Let me use a clean chart. Okay, we've been in this, here it is, like three weekly candles. We have a tri-star doji formation, which is a reversal of trend. These 3-star dojis, if you look at Investopedia, these mark a reversal of trend of the current trend. Whether it's bullish or bearish. So if we're going down, if we're trending down and we come upon this type of formation, granted, this last candle has not finished, has not closed out yet, so we still have 4 days left. A lot can happen in 4 days. But if we close here, we will close with a tri doji. Now, this tri doji, like I mentioned before, if you're in a downtrend and you hit this formation, it usually marks a reversal. When you're going up into it, it will mark a reversal, almost similar to like a diamond star, like a diamond pattern. But actually, it has a very perfect diamond pattern, kind of the same thing, a diamond pattern, reversal pattern. So however you want to read it, however you want to name it, label it, whatever works for you, that's fine. Now, my point is that we are, like I mentioned before, in a very, very tough spot of resistance. I don't expect this to be broken right away. There is some confluence building above the $30,000 mark, but it's not very high or intense. Let me show you what I'm talking about. If I reset right now, the screen that you saw was zoomed in, but if I zoom out, you start seeing the heat building up here at the 125 is the top liquidity at the moment. The top liquidity for liquidations, the heat for liquidations at 34,150. Very top. So we have this cluster here between 33,350 and 34,125. Then we have another cluster here between 30,500 and 31,300. So we have two clusters that is above this area. Now, when we look at this area, we talked about this before. Easily, we can map out a zone right here that we could go in and dabble in. However, again, talking about the liquidation data that we have on HyBlock, taking a look at the sell wall that we have at 30,000, and the fact that we've tagged this resistance here where we're at currently. If we do nothing else, if we don't go above here, we already back tested a lot of this support cluster. So technically, we've already done that. However, I still, based on the liquidation data from HyBlock, I think that we're going to go up to a little bit higher into that $30,000 range. And Bitcoin likes round numbers. We like round numbers. Look at these. Look at this area here. Look at the top of this. And you know what? Actually, on the index, I believe on the index, these were round numbers. No, excuse me, on Binance. Here, let me show you real quick here. BTC, USDT. Look at this on Binance. On Binance, nope, do the weekly. Right here, oh, I guess not. Okay, well, I was wrong. I was almost positive that we hit this on an exact level. This one we did. This one we hit 25,200 $250.00. I thought I had seen that before. I guess these two, I was confused. These two here ended at the exact same point at $25,250. So my point is basically saying that a $30,000, literally 30000.00 is not something that would surprise me to see, as a lot of these moves are pre-programmed. They have, look at the sell wall. The sell wall is not at 30,100. It's exactly $30,000. That's kind of my point, that these types of levels, they like big round numbers. You see the round numbers on the spot liquidation sell wall, and you often see it inside of these candles. So that being said, and the fact that we're up here, and the fact that we have pushed, we have beautiful reversal candle, we've pushed here, we put in a higher low, we put in a higher high, higher low, higher high. It only makes sense, and I'm not trying to be bearish. I'm actually more bullish than a lot of people, as I'm looking at this reversal pattern, and all I'm looking for is a back test, I want us to establish another higher low. In order to do that, we have to come down. And so for me, again, like I mentioned before, I know it's a little bit redundant, but for those who haven't heard it, or for those that need a refresher, anywhere between 24,000, let's say 24,250 and 25,200, anywhere around in this area is where I'm expecting the price of Bitcoin to find major support, because this was major resistance. We establish a nice higher low. You guys better be ready. We establish this higher low and we confirm it and we bounce. We are going to go into that, most likely go into that $34,000 range, and then basically start back testing the top range of support. So we've got a big range here. Look, we've got a big range here of prior support. So forget about this resistance. Just look at the support. Let's look at this market structure here. All of this price action, you can see here. Look at the way this candle body closed right here. Look at the candle body close here. Look at the wicks inside of here. This whole cluster here is a area of major support. So if we are at the bottom range of this and we reject, put in a higher low, cool everything down, bring down some of those oscillators, stretch that rubber band, like I mentioned on the last video, our next move is going to be probably inside of that $34,000 range. Again, I'm just guessing. This is all hypothetical because we don't have any of this data. But if we get down into that $25,000 range, right here into this 25, and we block, what does this bring us? This brings us to about 34,000, about 34,300. Again, snapping that line or moving this line up here. Do we respect that prior support? Yeah, yes we do. Yes we do. So this would be a great area here, guys. If you're shorting it, look for an entry inside of here. Look for an entry in here and a rejection. Go to lower time frames. Look for some bearish market structures. Enter into your short. Make sure you have a nice stop loss in case it's wrong. In case it rips, you get out of it. But if you are an experienced trader and you understand how to manage your risk, you'll be okay. 3-5%, whatever your comfort level is. Make sure you have that stop loss set. And if it does break out and it does reject, like we are planning, that we're thinking it will, start looking to take some profit in this area here. Obviously, you can do it many different forms. You can either, whatever you're comfortable with, put a stop loss, write it down, or wait for that bounce and then exit your position, market sell your position. However you want to do it, that's fine. My point is basically look at this area for support. If this area breaks, if we close, when I say break, guys, always remember, breaking doesn't mean that a wick comes down and hits it. It broke it. That's not breaking it. When I look for a break, I'm looking for a close underneath that level. It's very important you guys distinguish what a break or an invalidation consists of. Breaking it with a wick does not constitute a break in my book. Is a close below that level. So if we don't close below that level and we have a candle body close above this level here, I'm going to want to be exiting my short, flipping it into a long, and then taking that ride back up here. Is it going to be one straight line? Absolutely not. As you know, nothing goes up in a straight line. However, the probability that we hold this area and we confirm it as we confirm it as support from prior resistance has a good probability that we are going to be finishing this harmonic pattern somewhere in that $34,000 range. What again, we find the confluence with the 2-year prior support. So that's what I'm looking at for now, guys. I'm not too worried about. Let me go back to this here. Let me go back to the 4-hour time frame. At the moment, we're just chopping around inside of here. We're right above the medium line. Then we fall below it. We tag the bottom. We come back up. We confirm the medium line by either resistance, and then we flip it and we confirm it by support. And we're just ping-ponging between these 3 levels, as you see here on the chart. XRP. XRP had a nice little run yesterday, but what does crypto like to do? It likes to give it all back. XRP, like I mentioned before in the posts, it has some rumors of some, some settlement with the SEC. We don't know. I don't know if it's true or not, but nevertheless, something caused this coin to really start to put in some numbers. Now, this wasn't fake. And let me explain to you what I mean by that. Many people here who've been here for some time, when you see Bitcoin move, has an instant candle to the upside, you will notice that almost everything will start taking off. Again, like I mentioned this before, that is not people that all of a sudden at the exact same time happen to be in front of their computer, already logged on, and the second that Bitcoin took off, they hit the buy button on every single asset across crypto. That's not how it works. When that happens, those are just algos. Those are fake runs. They're not real runs. They're fake runs to cause you to FOMO and take over on the run and start putting your money. On the flip side of that, when Bitcoin pauses, everything pauses. When Bitcoin has a small little candle to the downside, everything has the same exact measured candle to the downside. Now, if you've been paying attention to XRP, it has not moved with Bitcoin. It's had a mind of its own. When Bitcoin was coming down slowly, this was coming up. When Bitcoin was coming up, this was doing its own thing. A lot of times this paused and Bitcoin stopped. This kept on going. My point is that this has been the price action here has been decoupled from Bitcoin. That doesn't happen very often. That means that there are people behind XRP, real buyers, buying this, constantly buying this and buying this. Obviously, we have some respected levels. The TA is working out really nice. We've got this white line is the 50 EMA on the 4-hour time frame. Been watching this very closely. When we came down and we confirmed it as support, then we broke. Look, we broke below it. Then we confirmed it as resistance. Got back above it, and look, came down. Look at this, back tested it there, and now we're just flirting with this line back and forth. Now that we came down here, does this mean that we're ready to go? Well, there's a lot more to it. We've got other technicals to look at. The 4-hour MACD at the moment looks very bullish. It's reset. It's reset. Does that mean it's going to go? I don't think so yet. I'm looking at the 12-hour MACD, and we still have more time. The momentum is still down. The higher the time frame, the more influence it has. So based on my experience on using the MACD, I know a lot of people don't believe in the MACD, but you know what? If you use it correctly, you can formulate a really nice game plan. The way I view it, from my experience, the probability is very high that until this resets, we are not going to see a next major run. And we still haven't hit our area of interest to scale in for another trade. This one respected the zone very nicely. Right inside of that zone, then came back and confirmed it, put a double bottom, took off. This one is basically stair-stepping its way down. Look, high, low, lower high, lower low, lower high, lower low, lower high. You see this? Look, this was not broken. This lower high was not broke. This did not break this previous lower high. So this is still a lower high. We're putting in a flag, expecting some more downside, especially when I look at this MACD, the way it is here, the loss of this momentum, the way we're losing the momentum here, there's a good chance that we're going to be able to tag 47.45 or 45.88 or 44.45. Maybe one, maybe all three. I don't know. I'm not that smart. All I can do is just put these levels that continue to repeat themselves and wait, be patient, look at certain indicators that tell me that, you know what, I think we're getting close, or we're ready to go for another run. And obviously the volume needs to kick in, but these technicals are here for a reason. We follow these technicals for a reason. They play out more often than not. Whether you use these technicals or your own technicals, whatever you use, I don't care. As long as it works and it's proven to work, that's all we need to know. Well, that's all that you need to know, depending on the technicals that you use. For me, this is a really big major tell for me, looking for the next move to the upside. Now, the next move to the upside does have its challenges. We have a really nice market structure that I think eventually, if everything continues, obviously, if Bitcoin continues to play along, doesn't have anything to measure, we have a chance to finish complete this pattern at 93 cents. Doesn't mean we're going to take one straight candle to go up to 93 cents. Bitcoin can easily come back down to that $25,000 level we talked about, establish that higher low, and continue to 34,000. What is this going to do in the meantime? This is going to chop. But overall, this market structure has a good chance to play out up to 93 cents. Could it go higher? Yes, it can. But typically, this type of market structure will end at the left side of the starting point, and then it'll put in a cooling off, some sort of flag pattern, and a continuation. But for right now, I don't want to get ahead of myself. All I'm looking at is, what does it normally do? What does this market structure normally end? It normally ends somewhere inside of this area here. So anywhere between 85 and 93, nice area to take some profit, and wait to see what else this has in store. What type of, put the technicals depending on what the top is. Looking for some of the continuation. So for instance, this is be pure speculating. Let's just say it does hit the top of that. Okay, then I will put on my continuation rule from this entire move, and I will be looking for a pullback into that 68.90 area or 61.45 for that continuation to the upside. That's how I would play it. But again, I don't know where it's going to stop. So this is I'm overthinking it at this point. But again, just for the sake of the video, I want to show you kind of my mindset of what I'm looking at, what I'm waiting for. This is the weekly time frame, so this is going to take some time, anywhere between 3 and 10 weeks maybe before this completes. This took 12 weeks to form. This outer side of this double bottom took 12 weeks. We're on week three. So again, these are the macro look, but within this macro look, we can take a lot of, sorry about that, guys. We could take a lot of, there's a lot of opportunity. There's a lot of ups and downs inside of here. There's a lot of trades and shorts that we can take inside when we zoom into the lower time frames. And at the moment, we are looking for, like I said, that continuing stair step down into our area of interest, so we can start, if you believe in it and you believe that this is going to continue, we are looking for a nice opportunity to buy and let the trade come to you instead of chasing it. Let's look at DOGE. DOGE here is, we all know, this pump for one reason and one reason only: Elon changed the Twitter logo from the birdie to the Doge icon and exploded. Okay, so now what? He stopped. He hasn't tweeted anymore. And does that mean that we're going to go all the way down? Well, all we can do at this point is look at the technicals. How well are the technicals being respected? Sorry, I lost my train of thought. So what I did here, first thing I always do when we're doing a pullback, I put my continuation rule. I want to see my continuation rule be respected. When it's invalidated, I move to the next rule. First rule, continuation. So what am I looking for? I'm looking for respect, a touch of 382 or 0.50, no closes below it for a continuation to the upside. Has it done that? Here, this is a wick. Remember, wicks don't count. I'm looking for a candle body close. We respected 382 and we respected 38 and 0.50. Well, how come we haven't taken off? Well, there's more to that. There's more to it than that. Look at the momentum. This is the 4-hour time frame. Let's go to the 1-hour time frame first. Look, 1-hour time frame, MACD reset. But we're not going anywhere. Why? How come? It reset. Well, there's other things to consider. Look at the 4-hour MACD. 4-hour MACD, we put in a double top. We had a bear cross with the signal, and look at where we're at. This matters. Don't let people that don't understand how to utilize the MACD tell you the MACDs, you can't use them to TA. They're 100% wrong. Been using this for 6 years, and it's worked out perfectly well. So don't be careful of people who just don't understand and how to use something correctly, and they're just discounted as, oh, that doesn't work. Oh, TA doesn't work. Those type of people, be careful with them. Rather, take the time to learn. Why is this? If this doesn't work, why is it? Why does Investopedia have an entire section on MACD and how to use it and how to read it correctly? Why does TradingView have it if it doesn't work? If it's just something that doesn't work, well, why have it? Again, guys, it's taking the time to understanding, to wanting to learn how to improve your skills. If this makes sense to you, great. If it doesn't, there are 1,000 different indicators that you can use and find one that works for you. So looking at the MACD here, we still have a lot of momentum to the downside. This has to resolve. Not only that, look at this. Look at the 12-hour. The 12-hour, we have a couple of things. We had a really nice. We have something here that for the bears and the bulls. Let me give you both scenarios. Let me give you the bull first. That everybody always wants to hear the bull. Nobody wants to hear the negative. So let me tell you about the bulls. Bulls did a great job. It respected the continuation rule. Look, absolutely perfect. I mean, you can't ask for better respect. Look at this. Absolutely perfect. And it's above the 9 EMA. Two things right there. Now, does it mean that we should take off any minute? We could, but here's the thing. You see this MACD? Again, from experience, looking at the MACD and the way that MACD and the signal are separated, this gap in between here matters. This matters. When we see a MACD in this type of environment, these two need to catch up. Now they catch up one of two ways. Price consolidates, allowing the signal to catch up, or we have a shift in momentum, a shift in price action, which comes down, causing this to close the gap that much quicker. Let's take a look. Backtest it. Always backtest anything someone tells you. Look, when we start, see how close we were here at the bottom? We start separating, it will come back and check it. We start separating, it will come back and check it. Yet the momentum wasn't lost. We're still in an uptrend. We never bear crossed this signal. We just happened to come back and close that gap. These two generally stay very close together. When they separate, it likes to come back and back check this. Here, we did a bear cross. We hit the medium line, the reset line, and off we go again. But look what's happened. We pulled away quite a bit. Let's go back a little bit further. What happens when we start, look at right here, when we start to open up, the exhaustion comes in and we start coming down and consolidating, trying to move, trying to reset, but we just can't. You can see the slope here. You can see these lower highs, and then double top, roll over. There we go. All of this is bearish market structure. We got a high, we got a low, lower high, lower low, lower high, lower low. One more push. We couldn't quite break past the prior lower high. We put in a double top, and there we go. You see, the same type of price action, guys. Same type of market structure between the price action. We could see it in here as well. Here's another perfect example. Look at this. Look at the price in here. We're nice and close together here. Bull cross. We start separating, and then what happens? Roll right into it. We couldn't pick up the momentum again. We tried, we rolled back, and then down she went. These types of indicators, guys, if you know how to read them correctly, they can help you exit a position or wait to enter into position and allow the trade to come to you. So based on this separation, DOGE, in my opinion, has still more time to go. Now, if Elon comes on and posts again, obviously it's going to invalidate everything and just continue to go. That's called FOMO. You can't chart FOMO. You can only chart disciplined market structure, regular market structure. This here was FOMO, but now this here is what we can chart. We can't chart this, but we sure as hell can't chart this here. And if everything stays the way it is, everything stays quiet, he doesn't come back up and try to pump the price anymore. Technicals are there for a reason. They get respected. There is a lot of history to this coin that allows us to be able to measure it. When a new coin comes to market and it has a one big, huge candle to the upside, that's more difficult. There's no data to help us assimilate a proper trading plan. All we can do is what? Wait for it to find a bottom, wait for it to consolidate, and wait for it to build some sort of structure so we can measure that structure, because markets like to move in a measured manner. That's why we come up with so many different indicators to help us measure those moves, and they typically have their own language per se. And each asset likes to follow a certain pattern. And when you recognize that language, when you recognize that pattern, it helps you to come up with a trading plan with time, and obviously with time and experience. So Doge, I think, still has some time. I don't think Doge is going to go anywhere anytime soon. Like I said before, we have some bullish stuff, bullish points that we could see, but I still think it needs a little bit more time to cool off, get down into a more reasonable area for that next impulse to the upside. Macro look, though, has a very good look, very similar market structure to, let me do this, very similar market structure to, what was the other one? XRP. Look, there's that double bottom. There's that double bottom. The only difference is that XRP had a W within a W within the larger W in here. This one just has a really nice double bottom here. And so we can easily see that we could. There's no reason why we can't get back up to $16, especially with this wick here. These price actions these markets like to clean up this price action, like to clean up these wicks. All of this trapped liquidity in here, we like to come back and tap it. At some point, we come back and tap it. So look, we've been leaving a lot of these here, a lot on the way down. So 100% at some point, well, not 100%, but you know what I mean. At some point, we will come up and knock out all of these wicks that are left behind. It's a matter of when are we going to get to here? Well, one step at a time, one wick at a time, one area at a time. And as those areas hit, we measure, we validate, invalidate, we move on, we come up with a new trading plan. That's the life of a trader. It's never ends. You don't just make up a plan and that's it. Nothing else can happen. A lot of things can happen where we have to scrap everything we just did and start all over because new data came in. All right, guys, that's pretty much it. I just want to cover those three main coins, Doge, XRP, and mainly Bitcoin. Ethereum, actually, no, one more point I want to make. Ethereum doing much better than Bitcoin, much better. Look, this followed a range very similar to Bitcoin. Very similar, was stuck inside of a really tight range. Do you notice the difference? Bitcoin is still inside of that range. This broke out yesterday and did not revisit that range. This stayed up on top of the range. It still has a much more bullish market structure than Bitcoin. So now think about this: as Bitcoin consolidates, resets, and goes after those, if it goes after those high targets to the upside, those liquidation pools to the upside, and we're already outside of this range, think about how much higher Ethereum has a chance of going. Ethereum does have a brick wall to hit at $2,000. Somewhere in that $2,000 area, it's got a brick wall. So it's going to be very similar to Bitcoin, where it already hit its brick wall. Let's look at the weekly. Look, this is a major area for right here. It's a major area, 21 to 2000. 21 to 2000 is a major area of support. So naturally, it's not something that we're going to hit right away. Now, I do want to note one thing. Local local move is stronger than Bitcoin. Local move. Let me explain what I mean by that. When you look at the weekly time frame of Bitcoin against Ethereum, Bitcoin is stronger on the macro view. On the micro view, on the in the intraday, well, not so much intraday, but in the local move, this is stronger. And I'll explain to you why. See these three lower highs? We still haven't broke this lower high. This is the $25,000 lower high set in August for Bitcoin. This is the equivalent of the lower high set in here. As a matter of fact, I'll do this here. Let me show you. There it is right there. Look. There it is right there. Set back in August 15th. Actually, it was set in August, the week of August 8th. Confirmed August 15th. Then we dropped off. We are here with an equivalent to Ethereum. We are here. Look how much farther from this structure we are from this. Look, we're lower. We haven't broken this. So macro, we're not. Bitcoin is still stronger. However, locally, we're at the moment, Ethereum is showing more strength than Bitcoin, but it still needs to hit here. It still needs to break and confirm above this prior lower high. And Bitcoin has already done that. Bitcoin not only broke it with a beautiful reversal candle, but has found acceptance above that. 3 weeks above that. Granted, not the best looking market structure that we want to see or candle pattern that we want to see. However, it's still above that. It's still stronger than Ethereum. All right, guys. I hope the video helps. I'll continue to give you guys updates. We're looking to see if hopefully this week, sometime this week, we could come up and hit those areas of interest that we're looking at on the HyBlock data and on the spot wall. I think that's going to be very tough. $30,000 is going to be a very tough round number to break, in my opinion. I will update you if this happens sooner. I'll definitely update you guys. What I would suggest you do is, one, go to the link in the description below, and if you want to sign up to HyBlock, you can get the data for yourself in real time, so you don't have to wait for my updates. Or two, you can go ahead and take a note of these lines, snap them on your charts, put alerts on them, and when they go off, send me a message on Twitter. Say, hey, BC, your level just hit. They just liquidated the contracts at 24.50. Oh, look, they just liquidated the contracts at 29.025. It's cool. It's cool to see that data and then put it on your chart, put the alerts on, and then boom, it hits. You're like, oh man. And then the crazy part is when it hits, like it did yesterday, overnight. It hit, and actually not overnight, early this morning at 5 o'clock in the morning. This candle hit that liquidation pool and came right back down. It's very interesting to see how well those pools get respected, and it shows you, it proves to you, not only this but many other metrics, that this market is not being driven by spot. It's being driven by derivatives. Very different. In a bull market, we are driven by spot. In a bear market, we're being driven by derivatives market. We're pushing up higher in spot as well because we've already seen the data. Everything's on the blockchain. You can't hide from it. These exchanges, I'm not going to name any names and start any conspiracy theories, but we all know who they are, who he is, who it was. They were printing printing their own stablecoin using internal wallets, buying up spot to push up the derivatives. Now they got slapped in the hand. And they stopped doing it, so now we're ranging. Ever since they slapped their hand and they are threatening. I'm not saying to bring them up on charges. I don't know the legality behind it. But ever since the announcement came out that they're looking into them, it stopped. The same day, it just stopped. So, I mean, come on, guys. You don't have to be a fucking genius to figure out what's going on. But hey, you know what? It got us up here. It got us up here. Whatever it takes to get us up here. I don't care. As long as it gets us up here and we can make some money off of it, great. And then when it finally dies out, we can make some money on the way down. If you want to follow this data, if you want to follow my setups, send me a DM. I'll get you access to my free Telegram group. If you want educational, if you want to learn how to come up with this tool set, how to identify these patterns, how to utilize the tool sets so that you can make money anywhere in the world, wherever you go, check out my Discord. It's a small monthly fee. It's the equivalent of a cup of coffee per day, and there's a lot of information. You have me 24/7. I'm literally on that 7 days a week, helping people out. I have a lot of educational material on there. I give daily updates in the morning. I call it the morning brief. I come in, look at the markets, talk about the markets, take a look at Bitcoin, see what it's doing, and any other requests that anybody sends me, I will look it up, chart it, and do what I can. But it's a really good community of like-minded individuals. We have over 300 people in the community that give their opinions, that give their expertise, that research projects, and keep us up to date on not only crypto, stocks as well, NFTs, metaverse, all that good stuff. All right, guys, have a good day, and I'll talk to you guys later.